So the numbers are out for the month of June, and what we are seeing, sales are up by 13%, prices down just over 2%, and inventory, well, it is still very high. June gave us the most balanced market we have seen in months, or so it seems. But if you are a buyer or seller right now, the story goes a lot deeper than that. Let's dive into what these numbers actually mean and where the market could be headed next for the rest of the summer into the fall. Stay tuned and let's get right into it. All right, so you can probably see my screen by now, and we're going to dive straight into this report. So June housing stats point to a more balanced market in the Waterloo region. Let's see what they're trying to say here and take it a step further. We had about 676 homes sold in the region via the MLS system. That represents 0.3% increase compared to same period last year. So compared to June of 2024, there is a slight increase, but I would say fairly flat overall. While if you were to compare with the previous 10 years average for the month of June, there is a decline, which is still a massive decline of just shy of 22%, exactly 21.7% decline compared to that average of 10 years for the month of June. So you can see the activity is fairly slow. Now, one important aspect, one thing that's worth noting, if you have been following my market updates month over month, and if you go back to the May update that we look at, like the May report, in that report, this activity compared to May of 2024 was down by about 9%. And this was down by, I don't remember exactly, but it was well over 22%. So you can see there is somewhat recovery, but we will see if that trend continues. That might point to a sign where some buyers are getting off the fence, coming back in the market, but that will have to show in the absorption of the excess inventory and the transactions overall. But this is still very early to predict or say anything. I'm not pointing to anything like that, but it's worth noting that there is definitely some recovery that we are seeing here. And let's look at the remarks here. While home sales in June were relatively stable, we are seeing a more balanced market emerge. Increase in the condo sales up over 34%, suggesting a cohort of buyers looking for more affordable housing options. Now, in all honesty, I do tend to somewhat disagree to this because, at least to the clients that I'm working with, I do feel like condos are the least favorite or least favorable piece of real estate that anyone wants to own as of today, at least. We'll see if that changes, but we continue to have excess supply of inventory. In fact, I'm starting to see that, my clients are no longer even wanting to own a townhome because they are seeing, well, within the budget, if they, there are better options available even in the detached space, right? So we will see if this trend continues. Then this might be what they are suggesting could turn out to be true if the condo sales continue to increase rapidly like this month over month. But for now, at least what I would say is, this could be just a one-off situation, but let's see how this pans out in the coming months. While more listings are coming to the market, properties are taking a little longer to sell. We'll see how long when we go to the charts and the numbers, giving buyers more time to make informed choices during their home search. Total, we saw 676 homes, major chunk of detached homes. So as you can see, they are the ones that are driving these numbers in terms of transactions and the volume of activity, followed by the townhomes. Now, this is where, how I was pointing it out, because townhomes, when prices were high, townhomes, besides the detached, were the next option for most buyers, and especially majority of the first-time home buyers sitting in that, 6 to 800K were likely fitting in that townhome as an ideal home that they can reasonably afford and see themselves moving into. Now that is changing with the prices coming down. Well, first-time home buyers do have better options available besides the townhome, whether it could be a semi. Truth be told, we don't have a ton of semi-detached homes in the region as a whole, but the detached homes, especially if you are someone in the 7 to 8, I've done a couple of videos just recently about what's available in each of those price points. So you can head to my channel and look at it. But what I'm trying to say is townhomes are not as favorable because, unless you are a buyer working with that 650, but the moment you get into that 7 to 750, you could get some reasonably priced detached homes that are move-in ready as well. That could be one of the reasons pointing to the slowness of the townhome sales year over year. And with 86 condo units, that's what we noted, 34% increase. And like I said, a small chunk of detached, although down by 25%. But like I said, we don't have a ton of the semi-detached inventory as a whole in this region. Now, average sales price was $780 and change. This represents a 1.1% decrease compared to June 2024. Now, just keep in mind, these average numbers don't mean a lot when you compare month over month. Yes, home price index tool, which does follow this, is something that we would be more closely looking at. And, again, we just look at it, right? For example, the average price of a residential property was this, down 1.1% compared to June of 2024. Now, this is a mere average, and I'll just prove it to you right now why it doesn't matter as much. If you look at the home price index benchmark price, Kitchener-Waterloo, let's take a look at this. Composite, which is basically a composition of all three types, detached, single family, townhomes, and the apartments. Month over month change, 2.3%. But year over year change, 7.5%. So yes, this is a true reflection of the price correction that's happened year over year in the market for all property types. And then you can again break it down, right? Surprisingly, townhomes are the ones taking a biggest hit over apartment condominiums. Single families are the ones that are, not as crazily affected compared to other property types. But overall, 7.5% decline year over year in the prices, benchmark price. Again, for the Kitchener-Waterloo and again for Cambridge, the decline is not as significant, but still, especially if you look at the apartments, which we don't have a crazy amount of apartment inventory in Cambridge, but especially you can see single family, not a massive decline. So you can actually pull up this tool and you can actually filter a lot of these items in the HPI tool, which I won't dive into right here, but there is a link below in the description for this whole report where you can actually pull up the home price index tool and play around with yourself. Or if you're really serious about making a move, then I would say reach out to a real estate professional who can actually find out the exact comps in your area, in your vicinity, so you know how much your home is worth and how we can go about it basically. Taking a step further, this is basically the end of the remarks part. What I'm gonna do is take a step further and open up the charts now. We will look at it briefly. Again, I'm not gonna dive into this two-part too deeply because we just looked at the breakdown of the sales numbers, which is basically what is showing the same thing in the charts. And same for average sales price. Again, we looked at rather HPI benchmark price. So I'm gonna skip that as well as the median price because in the short run, it's not gonna help you much understand what's really happening with the prices. Here's, how they mentioned in the remarks earlier when we looked at it. The average days on market is, what they say, it's taking a little longer than usual. Well, if you look at it, in the month of June, it took 27 days. Now, what I can tell you, I have mentioned over and over again, between the month of, say, early spring, so March to September, October, we say that's usually the busiest time for real estate. For buying and selling, majority of the transactions in any given market will happen between that time. Well, for this year, the inventory is supposed to be getting absorbed fairly quickly. Although average days on market, even a slow market, in any given point, we're well under 20. And you know what? I think, if you go back, I'll go back to this for a moment. You can see we had the average time to sell a home in June was 27 days compared to 24 days in the previous months. And if you compare with June 2024, it was well under 20 days. And if you look at the 5-year average, like I said, June is supposed to be a busy time. And, a lot of sellers come out, but the good thing is in a normal market condition, we see a lot of buyers come out in herds to absorb that inventory that's coming into the market. So used to take about 5-year average of 15 days. Now, just keep in mind that 5-year average does include 2021 and 2022. So not a true reflection of the overall market condition, but reasonable to say, it should not take about a month in a good market, right? So this is clearly pointing towards a rather, market that is skewed towards the buyers, I would say, in a way. So that's why we are seeing it's definitely taking longer, because more options are coming for the buyers in the market, and they are taking their sweet times because they have all the luxury to do so. And I feel like that's the right way to go about it if you're a buyer, at least in this current market. So do not let anyone tell you, even in the multiple offer situations, you can do your conditions, you can do your financing inspection, all that you need to satisfy your own, personal judgment before you make that move and firm up that offer. So you don't have to go firm in this kind of a market. This is the market that does allow you to, not just be picky about what you want, but, I would say truly take your time to see what you like, not to compromise overly, and not to buy something out of form, to say the least. Months of supply, you can see there is a sharp line that's shooting up. Now, we will see if that continues to go up as we head into the rest of this summer. But clearly, we have over 4 months of supply. Now, that, in other words, basically, if no new homes were to come out, let's say all sellers would, say, okay, we're not putting out any new homes in the market as of today, it will still take for the current inventory to take about over 4 months to be absorbed at the current pace of sales. So, while how many new listings are coming out? Close to 1,500 new homes that hit the market on the MLS system for the month of June, compared to which we only saw about 676 that actually sold, right? So, I do like to point out this sales to new listing ratio that, is a gold standard that we use to determine whether it's a buyer's balance or seller's market. So if you're all about the numbers, I will just point it out right here for you. So sales, how many sales we saw? 676. To how many new listings we have? We have 1474. And, oh, my bad. Sales, 676. Divide by 1474 to new listings. Times 100. So yeah, 45%. So they say anywhere around 40% or below is considered a buyer's market. 40 to 60 is considered a balanced market, and 60 and above is considered a seller's market. Now, if we go purely by the number and by this formula, then we are basically in a balanced market. And if you look at the previous month's update, and if you do the same ratio, that was, I think, around 40 or slightly under 40. So you can see that, market is shaping up to be somewhat balanced for sure. But I would say still it's more so in the buyer's territory than it is in the sellers. I don't think sellers are in the control in this given market. New listings, we looked at it. Homes for sale, basically added to the last month's inventory versus what's got absorbed. We have close to 2,200 homes, like 2,199 homes for sale in the region, which is a massive inventory that's available for the buyers in this market. And dollar volume of sales, it seems like it's kind of evening out somewhat. But again, it's a high level reflection of the overall transaction and the volume of activity in the given market, but won't give you a true picture of where the market is, and not a great indicator to help you understand where the market is actually heading. All right, so now let's take it a step further, and I will share with you my candid thoughts, about this market condition and what I can foresee. I mean, it's going to be very difficult for anyone to predict the market. With still, there's so much uncertainty. I mean, seems like we might be reaching a deal with US at any given point in the coming months, but, only when it happens, we would truly know that it has happened, right? As of right now, as we stand, the consumer sentiments are ultra low. The business investments are very low. And those things are showing off in the monthly job market reports, right? We are not adding as many jobs. Pretty much, it's safe to say we are in a recession right now, right? Now, those things could settle down. It could bring some consumer confidence back into the market. And when I say market, not just the real estate market, but the broader economy. Because right now, as it stands, many moving pieces within the economy are not where they need to be. And although the numbers might tell you different story. I mean, I saw an article the other day where, the Canadian economy is responding very, stronger than they had anticipated. But all things said, I mean, just look around you. So many people, are highly skilled, willing to work, but not able to find work. I mean, business investments, new projects are not getting started or funded. And, business investments as whole around you are ultra low. And, those things are signs of a weaker economy because everyone wants to hold off making bigger investments, taking bigger risk when the economy is surrounded by so much of uncertainty. And housing market is no exception to that. Rightly so. Buyers obviously would be on the fence. What I can tell you is, at least in the month of June and, so far in July, I can tell you, I've been busier than I was for the month of springtime, right? So clearly there are signs that, buyers are thinking that, it's just a matter of time, but we will eventually reach a deal with the US and it's not going to be the end of the world that everyone projected earlier back in March and April when, those tariffs were imposed on Canada. But economy as a whole, there's still a lot of recovery. Right now, things are well within the buyer's control, although they say it's a balanced market. But I would like to argue and say it's more so skewed towards the buyers. And, it might continue to be so unless more buyers come in the market and the current inventory get absorbed. But we are yet to see that. One might argue there are early signs of that, but we are yet to see that. That will have to continue. The current inventory will have to get absorbed at a higher level for that to turn into a completely balanced market that, both buyers and sellers are on the same ground. Right now, sellers are somewhat, on negotiating position than the buyers would be. Sellers are less in control than the buyers would be. That's what I'm trying to say. So overall, it's a good time to consider buying. I'm not saying he is out of FOMO. I don't project or think the prices will shoot up at any given point in near future. But if you're a buyer who is ready, financially, that it's a right move for you and you have a stable job and some sustainable savings that you can sustain despite if that was to happen where you lose your job, God forbid, then this could be a good time. But just know that you will have to have a long enough time horizon in a market like this. And having said that, on the other hand, if you're a seller, I mean, patience will continue to be the key. There are some early signs of recovery in the market, but we are far from seeing that totally balanced market right now. You want to do as much as possible with your marketing, the pricing, and you have to stay put with your offer strategy. Everything has to be on point for you to move that home off the shelf. And a cookie cutter real estate agent, just by putting the signs out on the yard, is not going to cut it for you. I can guarantee that. It's just going to be playing around with the price and offers, but I can tell you it's not going to land you where you need to be if you are a seller in this market. So that's how I would sum it up, the June market update. I am going to continue this monthly market updates that will keep you posted on what's happening as we head into the rest of the summer into the fall. What I can see is if we were to reach the deal with the US on the tariffs at any given point before the end of the summer or into the fall, that I feel like will definitely somewhat bring buyer confidence back into the economy. The job market will show signs of stability, and we might see that, kind of a domino effect into the real estate market. But let's see what happens. We are going to continue tracking right here on this channel, so you can stay tuned and keep yourself updated on what's happening in the Waterloo region real estate market. And if you got some value, then be sure to give it a thumbs up, subscribe to this channel, and tap on that bell so you are the first one to get notified when the new video pops out. And whether you are thinking of moving in 9 days or 9 months, be sure to reach out. All my contact info is right below. I'll be more than happy to help you and family make a smooth move in and around Kitchener-Waterloo. Until next time, well, I will continue to show you around the town.